Let's go to the United States to Ilia Bouchouev, managing partner at Pentathlon Investments. Ilia, your thoughts from the U.S. perspective here, if it's not even yet a crisis in the UK or Europe, U.S. must still regard this conflict in the Gulf and the Strait of Hormuz as someone else's problem. It's not disrupting my barbecue this holiday weekend. Where is this landing at the moment in America and with pressure or not on Trump?
Yeah, let me convey a little bit of a sentiment from this side of the world. I'm actually in London now.
Okay.
I was visiting a lot of traders from different sides, expecting exactly the question you asked me for, and I was really, really shocked how low oil is in the order of priorities for financial investors. The really semi-jokingly, half of my meetings were discussing the football and the Arsenal winning the league and losing the Champions League, and the other half of the meeting was how do I get tickets for the World Cup? And then probably the last 5 minutes, oil. Oh, we don't really trade it now because we cannot sell it. It's stupid to sell it, and we cannot buy it because the risk is too high. And a single tweet, oil market can drop 10%, and I'm gonna lose my job. So that's a basic sentiment in the financial macro community. I can't really do anything with it. So my focus is elsewhere, and besides, the equity markets are booming. So the further away you go from the Middle East, again, the less of a problem it is. I know there is a lot of media talk about gasoline and inflation, and I do talk to the media quite a bit, but honestly, just not high enough. So it's not so far. Haven't really seen. Yes, we are watching the inflation for sure, but it's not high enough.
But if you take the sort of, obviously that's what you've articulated seems in sense, if one was reflecting on the last 100 days of this conflict. But if we look forward to the 90 days ahead in terms of the summer months, even ExxonMobil, Chevron, Vitol, all of the major players at the front line of the coalface here on physical oil and oil production are starting to make very similar sounds that this crisis is only around the corner in terms of the scale. Are they being exaggerating, or are policymakers not, or where is the disconnect between those two voices?
All right. Look, we all here like somewhat analysts. We like apocalyptic forecasts. If you remember, like last year,
But
when I
this is
was
ExxonMobil. They're hardly, they're
okay,
typically sober Texans.
fine. Let's go back still to the last year. We had apocalyptic bearish forecast. So we are going down. And when I was on your call last time, my summary of the market was that everybody is bearish, but everybody is long because back then at $50, oil was cheap and people were just buying it while being bearish. So now my market summary is everybody is actually very bullish, myself included, but nobody is long. So yes, we are kind of fundamentally bullish, but I'm speaking from the financial market. Fundamentally, we all bullish, but we are not buying this market, and that's why oil prices can't even break to above $100. And $100 from the historical perspective, well, that's nothing. So you may see a bit more disconnect between the physical and financial markets. Yes, the gasoline, yes, it genuinely has a fundamental issues. We all accept that. The stocks are low, it's trending down for sure. But like what, 450, given the state of the US equity markets, the whole boom about AI, the economic data is still fairly reasonable. You got a new basically report yesterday was that the layoffs are low and the job openings are not falling. So everything seems to be generally okay. The gasoline is a little bit of an issue, but again, given that so much money is now coming from other sources, uh, the gasoline has an issue. I mean, I would accept that.
Yeah, this is clearly a all the Christmases wrapped into one for the U.S. oil and gas industry, isn't it? I mean, where does that feed into further export capacity for the U.S.? How embedded does the U.S. industry perceive this to be? As Narendra said, they're going to be looking for alternative supplies here. It's hard to identify reasons why Trump or the US energy industry would want to change the current status quo at the moment.
Yeah, I mean, there is obviously a lot of discussion between the administration and the energy industry. First, on the administration side, I'm not a politician. I don't have political views, but I think I give credit when the credit is due. And I think the administration did an absolutely marvelous job managing the oil prices by destroying sentiment in the financial community because nobody in financial community wants to be long oil, and that's why we are seeing a massive disconnect between the financial price of oil and the physical shortages. So they did an absolutely marvelous job doing this, and they sold the SPR on the highs. So I give them credit for this. In terms of the oil producers, again, there is disagreement between administration and producers. Administration wants drill, baby, drill. Producers' new motto is hedge, baby, hedge. That's what we are seeing in the market. So a lot of capital is going, okay, we got a spike in oil prices. $80 is great. Forget about drilling. It's not our priority. Lock in the price. So the hedging is on extreme highs. And that's another reason why the oil prices are not higher. So increase in export capacity, I mean, it's a secondary. So to me, lock in the price, be active in the market, and that's what they're after.
What about more and more for export rather than for domestic? How does that impact the domestic market in the US? It must elevate prices on the ground if the producers are trying to move as much as they can, particularly on gas to export markets.
Yeah, I mean, there was a lot of discussion, but administration was very clear. There is no gonna be no export ban or anything like that. There's obviously concerns and discussions, especially recently when we got the situation about jet. So why are we exporting jet from the United States now? Now gasoline might have an issue, but again, I don't see any material changes or any kind of unexpected political announcement on that side.
Ilia, last word to you. Obviously, we talked a bit about the US production. There's this survey results. Very overwhelmingly, have we seen the high water mark? No, 3-1 in this room. There you go, with your everybody's conceptually long, but maybe not putting the money on the table. Ilia, what about the rest of the Americas? We're seeing reports that already Venezuela production is increasing. Does this event, however long it lasts, more become a game changer for deep sea, higher cost production in the Americas?
I don't think so. I honestly don't. The short answer is, and in response to your earlier question, the day after, I actually the sentiment in again the financial community is higher for longer. So we're gonna see higher. I mean, I have no idea which way the oil is gonna go from 100 today, but the forward market below $80 are cheap. They are structurally underpriced. You need higher price to incentivize more non-OPEC production. And SPR is going to be rebuilt. Somebody's going to have to buy it back. So the price has to move up in the back, forward price, for us to materially increase the production. It's
Yeah.
not happening at the current levels.
And any particular insight on the outlook for Venezuela?
No.